Good morning, everyone, and welcome to the Flow Show. Here we are on, I think it's Wednesday. These weeks seem to be flying past, days flying past. Welcome to the folks from ACAP joining us once again. I do hope you can join us during the week. Normally, every day we run this show at this time, so please register and come and join us over here. Good morning to my colleagues, Kayman and Stelios.
Good morning, Ryan. Good morning.
Good morning.
Everyone all right?
Yeah, perfect.
Yeah.
Good morning.
We finally had a break in the weather down here in the south coast. Exceedingly hot yesterday, and typically, just as the kids broke up, my kids broke up for summer 12:30 yesterday, and by 3 o'clock it was cloudy and threatening to rain. So we've said goodbye to summer for the next 7 weeks at least, until they go back to school, and then the sun will come out again. You don't mind, Stel? You probably see the opposite. You see probably 3 clouds in the next 6 weeks.
Yeah, we have some fires, unfortunately, near Athens.
We had a few fires here in Essex, or up in Essex. A whole street of about 30 houses got taken out. So,
wow.
Yeah, not good news. Not good news at all. Right, so let's get cracking. As we often do, we'll start all the way over in China. COVID cases jumping again. They had 150 new cases. Now, if you add that into, they have local cases and asymmetric cases, you had that in, that comes to about 970, just under 1,000 new cases, which apparently is the highest since the pandemic began. So a big deal happening over there with regards to their zero COVID policy. You know, cases are on the up. And in fact, we've just had a headline out from Chinese officials about Shanghai saying that everyone should test at least once every week. And those who do not test weekly and cause a spread could be held accountable according to the law. So they're playing on with the zero COVID policy over there. Shanghai may be heading towards more lockdowns as well, due to cases rising there. Some other districts, have the odd case, and lockdowns are probably coming there. But on the flip side, it's not all one-way traffic. Macau, obviously the famous gambling resort or area, that's going to reopen on Saturday. So you can't go out if you're in Shanghai, but you can go and gamble if you're in Macau. We also had some rate news from China. Their loan prime rate, or rates, came out last night unchanged. This is one of the areas where they have tinkered with rates as part of adding some stimulus to the economy, or easing up financial conditions over there. They haven't gone whole hog on some of the bigger rates and the main rates, but it's been these smaller rates that they've been adjusting recently, and they haven't touched them for a few months, I think now, but they were left unchanged anyway. And we've been speaking about the housing problem over there, the developers problem in that sector, and we had a story out yesterday that China may offer waivers to mortgage holders who have had trouble with property developments being paused or not happening at all. People continue to pay mortgages, and there's been further news today that people are actually starting to boycott mortgage payments. On top of that, we've had that there's been issues from developer suppliers not being able to pay their bills because they're not getting paid by the developers. So it's a continuing snowball, if you like, in the property sector over there in China. It's still largely contained to China. You know, a lot of people looking at whether it spill over into the bigger issues, global issues. Again, as I like to reiterate, China does have a way of containing these things. You know, if they want to fix a problem, they can fix a problem with a click of the fingers. So while we hear that this mortgage issue can affect maybe some, I think it's 300 billion dollars worth of mortgages and investments in there, it's really peanuts if China want to draw a line under it, just like they did with Evergrande. People expecting a big global fallout from Evergrande. That hasn't happened as yet because China, partly they want to save face. They don't want to have problems like that. But also, if they are going to westernize, they need to learn how to deal with these problems. But until such time as China says we won't have the backstop in place for the wider market, it's not an issue. But we still keep an eye on it to see the developments in case it becomes something that risk trades pick up on. Speaking of COVID cases, Tokyo hit 20,000 cases apparently yesterday. So virus issues prevalent there as well. Something to keep an eye on. Again, looking at lockdowns potentially over there and what effects they will have on the economy. All the while the Bank of Japan, due tomorrow, is set to keep easing, and COVID cases rising and further lockdowns would be another case why they would continue on that path to offer support for the country, although it'll mainly come from the government fiscal measures for that side, but still will be backed up by the Bank of Japan keeping easy. Over to Italy, we've got the ongoing comedy show with Draghi. He's he spoke in the House this morning. His comments were at the start were pretty much, very dour. He was saying that the government can't function while parties are fighting and divisive, and there's an air of divisiveness between the parties. He obviously had put his resignation in last week, which got rejected. It is possible he puts it in again today. What's happening now after his speech? He's pretty much put the onus on the other parties and said, "Look, we've had a functioning government. You guys need to sort yourselves out, basically, or we won't have a government." And then what's going to happen is we've got another confidence vote later this evening, which is 6:30, I believe, European time. After that, what happens through that depends maybe whether the Draghi resubmits his resignation. But it looks like perhaps what he's saying now may tip the balance and get the parties talking again. Certainly, one of our guys in our chat room, Five Magics, our resident Italian, our man from Milan, as I call him, even though he's not from Milan, he's saying that it is maybe possible that the parties do come together and we get over this hump and the government continues and Draghi stays on. But the confidence vote is later on this evening, so there is a little bit of a risk event. Although the market hasn't really seemed to be taking much on board with that there. Looking at some of the other things, rate odds for the ECB are on the up again via a different metric. There's several metrics that people look at for these rate probabilities. Yesterday was money markets pricing 60% chance of a 50 pip hike tomorrow by the ECB. Now she's coming from the OIS or the Sonias, I think, and they're pricing a 50% chance of the ECB going tomorrow. Also, the Bank of England rate odds are 98% for a 50 pip hike at their 4th August meeting. So again, this is what we're looking at, where the market is setting its expectations going into these meetings. From that, we get to know where the price risk is. So these rate odds rising for a 50 pip hike tomorrow puts the danger zone if they disappoint and only go 25. Then we're likely to see the euro taking a decent punch in the kidneys. Same for the Bank of England, although I think that the Bank of England are more chance of going 50 at their meeting than perhaps the ECB. That's not to say I don't think the ECB should go 50, but we have to reconcile what the market thinks is going to happen against what the ECB have been saying for the last few weeks, and they've been adamant, a lot of them, that it's going to be 25. Doesn't mean they might not change their minds. They're sitting in the meeting, chewing it over, and arguments might get pushed forward, and they turn to 50. Who knows? But it would be a bit of a surprise if someone like Lagarde switches. She tends not to do things off the cuff. Even when she was touting a hike coming in July, she switched pretty quickly, but she put that in her speeches, and I can't remember which day it was, but it was a particular speech and comments that she issued where she turned and said that a hike in July was a possibility, and things then developed from there. So as usual, we've got the expectations going in. We know where the price risk is. Come 12 o'clock tomorrow, or last bets are made, and we have to sit and wait and watch. In other news, we've got also this Nord Stream stuff going on. Putin's been out last night and was rehashed again this morning by the Wall Street Journal, saying that Nord Stream will fulfil all contractual obligations regarding flows through Nord Stream. However, he threw in a caveat that at this particular turbine, everyone's been making a fuss over, which is not due for this part of the maintenance, but a later part of the maintenance, that flows could be reduced unless this part gets there in time or sometime soon. So what the market's really seeing now is, it's likely that Nord Stream will restart up again tomorrow, but how much it restarts up by and what the flow levels are like is going to be the question. And then is that going to increase when this turbine turns up and gets plugged in or whatever? So that's all I've got myself on the headline front. Any of you guys got anything you want to add to that?
Morning. One thing I want to mention, obviously tomorrow is the big day. Before that, though, one thing to note is, did you mention we had the UK CPI 9.4% year on year, which was well above expectations again. Well, actually not well above. It was above expectation and well above the previous print. And yesterday, we had the average earnings index. So we usually look at how these two compare, because that's the pinch or the benefit that people feel. And you obviously want your average earnings index to be growing at a faster pace than inflation. Well, unfortunately, yesterday, average earnings went down from 6.8% to 6.2%, and inflation went up from 9.1 to 9.4. So this is not good. You have over 3% of a difference, and this is something the Bank of England looks at. Just something to keep an eye on. Regarding the Bank of England, the ECB, my view, I know it sounds controversial, is that they both need to do 50. And I agree with you. I think the Bank of England is closer to doing that, but I think the ECB really has no choice. And if they don't do 50 tomorrow, their credibility is going to be, well, whatever credibility they have, it's going to be shattered. So, I mean, it makes no sense fundamentally, economically, as a central bank to not be hiking aggressively when we're seeing inflation like we are now. These are not unprecedented times, but we haven't seen this since the 80s. So they have to do things that haven't been done since the 80s, and they have to wake up. But then again, it's Lagarde, so you don't know what you're going to get. So that's just my 2 cents.
Yeah, sure. Kay, you got anything on the headline front you want to share?
Good morning, everybody. A bit similar to Stel, this UK CPI, the 0.5% that the Bank of England is supposed to do is already nearly absorbed. If you look at the headline CPI, at least, it already shot up another 0.3% from last time. So even if they do 0.5, it's not really a big increase even. No, the other thing I saw in the news overnight was that the Japanese government, and that may be interesting for the Bank of Japan meetings to come, is that the Japanese government is appointing 2 new members or replacement members to the Bank of Japan Government Council, and those 2 are less dovish and less reflationist than the ones who are right now on the board. So there's one guy coming from the ex-Mizuho, I think, who will replace, his name is Takata, who will replace Kataoka. And Kataoka was one of the biggest doves, or is the biggest dove, because he was even dissenting during meetings to even do more to fight the economic downturn and to do more to get inflation to push inflation up. So he's going to be replaced, and then there's another person, Tamura, who is also an ex-banker. So we're going to have 2 fresh members joining the Bank of Japan from Sunday. So it's after this week's Bank of Japan meeting, but for the upcoming meetings, we may start to see some changes in the Bank of Japan approach. So we should be keeping that in mind. And really, for the rest, what's happened overnight, and that's about what I saw as well. Yeah, I didn't see much else. Oh yeah, today we might have Biden announcing something on climate. So there's been an article, a couple of articles actually, or I should say a load of them, doing the rounds. But some of them now saying that he might not declare emergency straight away, but just try to put measures in place, because he's got a bit of an issue with Manchin again on his own side. So we might hear from Biden on climate as well. So watch energy prices for the rest of the day.
Yeah, thanks, mate. Just want to say a quick hello to Josh and John watching on the 8cap stream. I can see your comments there. Unfortunately, there's no facility for me to reply to them. But if you want to ask any questions, please pop it in the chat function there, and we are keeping an eye on it. Yeah, looking at the data, CPI was higher. Again, though, we've seen a core measure dipping back. The year-on-year core measure dipped back to 5.8% from 5.9%. So there's still a little bit of a divergence between the headline numbers and the core numbers. Still running hot, obviously, but it's a theme we've seen in a lot of the other CPI measurements from the US, from Europe, and so on and so forth. We also got the PPI data. Now, PPI is obviously very important for the feed through into inflation. It is very volatile. Even in quiet times, it can be very volatile. You can see numbers 8, 9, 10%. But it's still running hot on the year-on-year numbers. But what I like about the UK numbers is they give input and output measures. And that to me is fairly important, because it can give you a sense of the pass-through of inflation from people who buy stuff to when they produce it and send it out again. So if we look at the monthly numbers, it was up 1.8 on the input side and up 1.4 on the output side. Now, I tend to use this as a loose estimation of business profit margins, if you like. You know, your costs are X, your profits are X. And so if output prices are matching or close to matching input prices, it means that the costs are being passed on fairly quickly. If there becomes a big disparity between those two, let's say input prices are rising a lot, output prices are not rising a lot, that can tend to signal two things. A, that perhaps producers aren't willing to pass on prices because maybe they think they're not achievable, and so they're going to wear that cost for a little bit. But on the flip side, if output costs start outstripping input costs, that shows that inflation and cost is being passed on further down the line, and that is what the signal is for larger inflation moves and more inflation moves being seen in the core. So it's not a direct scientific correlation or anything like that. It's just something I've picked up on over the years that I keep an eye on, just to see how fast maybe inflation is moving through, particularly in the UK. Now, yesterday we had the first round of the main housing data from the US. Last week's MBA numbers and we get those again today. We'll look at those in a moment. Last week's MBA numbers turned around a 3 streak of better numbers, and they started sliding again. And this has been on the slide pretty much since the beginning of the year, you know, end of January, February time. And it's been a good indication of how the housing market has been performing. Obviously, we saw the NHAB housing market data dropping 10 points on Monday. That was a big move. Not often you see a move like that. So further problems there. It dropped in all the metrics, expected sales, single family sales, that sort of thing. And here we have building permits and starts. Building permits beat expectations, but still fell by 10k on the month. Not a big move, but it's continuing the theme we've seen here with negative numbers. Housing starts was a bit funny. It missed expectations. It would have beat last month, but last month got revised higher. So in fact, this month is actually a fall. So there's a bit of positivity from the higher revision. You can call it a bit bad because it's now lower than last month, but there's obviously a bit of skew in there at the moment. Long and short is that these indicators are still starting to head lower, and we should start to see that, obviously, or whether we start to see that picking up in some of the other numbers. We've got existing home sales today, and as I mentioned, the NBA numbers that I look at, a weekly number, just to get a little bit of a sense of which way the wind's blowing. Also on the data front, we've got Canadian CPI coming in. Obviously, with the Bank of Canada doing their surprise 100 pip hike, this is probably going to get expectations running wild again as to whether they go for something just as large at the next meeting, or whether they're going to pause or bring it down a bit, depending on how hot or not these numbers are. So again, we could have some pretty volatile moves for the loonie and CAD over these numbers coming out today. They like to have several goes at guessing the CPI. They have their core common, core mean, core trimmed, core this, Bank of Canada core. You know, how many goes do you want at predicting inflation? Well, the Bank of Canada got you covered. So keep an eye on those core numbers. Keep an eye on the headline number as well. Expected in the headline to jump to 8.4% from 7.7%. So a big jump expected anyway. Anything north of that, 8.6, 8.7, that's going to get the market really thinking about, you know, larger cuts again from the Bank of Canada. So that's it on the data front that we've got coming out today. So let's get cracking into some of the prices. Now, I was off yesterday afternoon, so I haven't got a good handle on what's been going on, but just looking at euro dollar off the bat, looks like we're now into possibly some consolidation ahead of the ECB tomorrow. It looks like we've finished bouncing for the moment from the parity level. We've made it into the 102s, and now we're just we're seeing this bit of sideways action as we scroll forward to the ECB. We might get a bit of positioning tomorrow, last minute positioning, you know, depending on where we are for this one. I'm not expecting too much. Kay, Stel, I know you were in for the rest of the day yesterday. Any observations on the euro right now?
For me, no. I mean, we're still in the range before the ECB. 103.5 is a high, and that's really what needs to be broken for me to turn very bullish on the euro. But until then, you know, I personally didn't see that much of note yesterday in the afternoon. But you know, 103.5 is the high for me, and then, you know, but we have tomorrow's big binary event basically. Yeah.
Okay.
Yeah, same here. Not seeing too much. We've been in a range. I thought there might have been a small bigger impact when the Nord Stream was news came out saying that it would be restarted, but we still haven't heard from Siemens on the other side of the pipe. So that's a bit uncertain. And then, yeah, over to the ECB and perhaps what Draghi has to tell us as well later on today. He sounded a bit downbeat to start his intervention, but then afterwards he turned around to a more like asking for support theme. So that's a bit status quo. Everything is a bit status quo, but we have to look at perhaps other stuff where Canadian dollar antipodians, copper is trying to put in a revival as well. Perhaps a couple of other things to watch in the advent of the ECB.
Yeah, I mean, from here, if we do stick around this sort of mid 102s, for me, I'm going to call it the 103.40, 60 area up to this fib, the prior multi-year low there, and obviously still bang in the middle with his 50. This is the sort of range. So we're talking, you know, 100 odd pips, maybe 120 pips. This is the sort of range perhaps where if the ECB does go 50, this will be a very good test point. The market is leaning that way. So how much upside there could be if they do go the 50, there will obviously be a knee jerk. How this level reacts over the ECB is going to be very important. If we get up there, can't get through it, to me, that's going to be a big signal that perhaps we're not quite ready to carry on moving up. Doesn't mean we're going to go all the way back down to parity, but it just means for now, this is the line in the sand. And if that's the case, that's going to be an area to try shorts again. What will be interesting tomorrow, and we'll talk about this a bit more tomorrow, is the reaction. Is you've got to be careful that you get an initial move on the announcement, then the market goes into pause mode while it gets through the press conference risk. So you don't want to get sucked into a false sense of security that after the announcement, the market has done its thing, the euro's done its thing, and it's finished. Because sometimes you can get a second wind after the press conference if there's been nothing in it that changes what's coming in the announcement. Something like they hike 50 pips, but say September is going to be 25 pips in the press conference. That would take a lot of the heat out of the 50 pip move. And that's what the market does. It just pauses and just gets over that risk event. Here's what Lagarde has to say. And then it makes its decision. Do we carry on with whatever moves in play or do we reverse? So that's what you need to watch for this, but that is going to be a big level in my opinion. And again, what I do with levels over these things, even if I see a break, I want to see how the level reacts after that break. So if we do blow through it, does it hold or do we come straight back through it again? If it becomes support, that gives you a bit of a basis to say, right, well, now it's trying to build something here on the break. If it busts above in a quick move and comes back below, you're going to say that's a bit of a knee jerk, a bit of a false break. Maybe we hit a few stops through there, but again, we're not quite ready to carry on moving up. To the downside, as Kay's mentioned and we mentioned, if there is disappointment tomorrow from the ECB and on two fronts, from Nord Stream 2, any negative news from there, then we could be heading all the way back down to parity. And again, that'll be a big level to watch. If we start finding support into there again, that's going to at least tell us that perhaps we're not ready to really push lower. And we probably might see a decent range forming, maybe going into the summer trading. Could get a decent range to just ping pong between and set your trades in between. So that's what I'll be looking for anyway for that one. Just have a look at dollar yen, and again, please, ladies and gents, if you do want to. If you do want us to look at any particular pairs, give us a bit of your thoughts behind it as well. But put it in the chat room and we'll go through them and have a look around them. Dollar yen, I got tripped out of my trading stop. I was short from 138.70. Managed to get a last chunk away at 137.45 yesterday before this bounce, and my trailer got hit at 138.25. I was going to stick my trailer just above this area, this 40.45 area, but once we got this big move down, I thought, right, I'll bring it down a bit lower, just above the 20.25 area, which was around here yesterday, but that got pinged out, so I'm neutral on that at the moment. It's looking pretty neutral. Again, we've had the move down, it's found a bit of a bottom. It did break through the 80.85, but it's found support again there. So, a little bit of an overdone move here perhaps. And now we're going sideways again. Obviously, the Bank of Japan risk event is coming tomorrow, and that's going to play in traders' minds. Maybe some JPY risk, yen risk comes off the table, just reducing some positions, and we see a bit of sideways action. Kay, what's your thoughts on the bounce back here?
On the dollar yen?
Yeah,
and I was saying yesterday I was playing off that 137.40, 55 zone-ish, and I took it off this morning just because it's Bank of Japan tomorrow, and I prefer to wait a little bit. I'm still pretty constructive on if not dollar yen, looking across the dollar spectrum for now, but I'm still pretty constructive on yen crosses if the Bank of Japan is keeping its hands still, at least until the ECB thereafter. Do
you want to take the charts, mate, and go through some of those crosses?
Yeah, sure. Yeah, why not?
Hang on, let me stop it there. Stop it there. Yeah, all yours, mate.
Okay. I have to share on both, right?
Yep.
Okay.
Yeah, all good.
All right. So the one thing in first of all, the dollar yen, I did it in two separate parts because we had such a big move going on. So still the 139.42 on the top side is going to be for me pretty important because it's the extension of the Abe move, the first extension of the Abe move, and we stopped right there. So this to me is a pretty important level to break if we have to break into fresh ground at least for the past 2 decades. Going above there, I've got a 142.5 ish, and actually if we would overlay this and take this as a bull flag somewhere, we'd arrive somewhere in this zone as well, 142, 144, and I'm going to show it on the CAD yen because it's a bit of a similar setup, although the CAD yen in a smaller time frame. So watch out for this level if Bank of Japan would not say anything at all on the dollar yen. I would watch out for this level. On the short term, I'd say I have to go to a lower time frame here. There, that was sort of what I was playing yesterday. This zone here, around this 40-65 zone. This is where I bought a little bit yesterday, but took it off because I have this 138.25, and then not knowing what Bank of Japan is really going to do. Kuroda wouldn't be the first time that he surprises the market and all of a sudden changes tack like he did in where was it, on the World Economic Forum in Switzerland in 2016. So I'm a bit neutral on the dollar yen, but then when we look at those crosses, Aussie yen has again broken above this triangle and is still looking pretty perky. We have a resistance here, which we also already had in April. We spiked above, then came back below, formed this triangle, and now we're back here at this April zone in the Aussie yen. So I would pay a little attention, sorry, about at this level, we are right on it. If you're long, if you played the break, if you also played the break of this trend line, I don't have to tell you what to do, and I can't tell you what to do, but if I would be long, I would just, if not everything, take a few off and then see what the Bank of Japan comes up with. Be careful if ever it goes back below, I'd say 94.70, 94.80 after the Bank of Japan, because we have this level as well around this 94.65.70, which is going to be relatively important for the post Bank of Japan decision. The one which I really find interesting is the one here. I draw this when it was actually happening, and at the time I was saying like, wow, this is some bull flag. This one, we could go all the way up to 110.80 in Canada yen, and then we broke it up quite sharply. Then we had the first, well, one of those setbacks in that we saw in dollar yen. One of those, I don't recall whether it was the first time he went to 137 or 135ish. I don't really recall, but we had this setback, and then also oil was coming off from the spike high, so we had this setback. But we never made it back to the flag. We stopped well before, and now we are gradually going back on the way up. So I would be careful if post Bank of Japan we are holding 107.15 to start with, and then 106.50 is another level. We're trading around 107.45 right now. If Bank of Japan leaves everything still, this one to me has still the potential to go and have a look up there. To be honest, because if we look at even oils having come back, there is still gas story, and Canada also exports that one. There's a few hiccups with refineries. There was a bit of a story on was it the Keystone pipe as well. So we're still in a positive environment, all in all, in the Canadian dollar. We had this big washout of Canada on the dollar Canada, which shot up to 132. But since then, we had like a 350 points reversal already. So that is, of course, also helping this Canada yen. But it still looks pretty powerful to me, this move. So as I said, watch out for a starter around 106.5, and then I'd say a bit 105 is going to be the level of no return for this move right here and now. I'd say so. Keep this one in close to hand. I'd say if for after the Bank of Japan. Euro yen. As I was showing last week as well, Euro yen, I've traded off this 139 60.75 area for a little while. I didn't know what was going to happen with the euro as such, but this is starting to push up again. Keep an eye on this 143 zone for post Bank of Japan, and we are trading at 141.5, a bit in the middle of this 139 60.75 and this 143. But watch out here. I think this could be why not a valid target post Bank of Japan, post ECB, if ECB would have the logic idea of going 50 BPs. Personally, I still have to say, I think ECB should really take this opportunity to do 50. I completely agree, and Stella and I, we have been talking about that, and they should really do 50 and leave the door open for more later on. But if they would only do 25, I wouldn't touch this one, because then we could have like an opposite pushing and pulling in yen if Bank of Japan leaves everything still. And ECB would only do 25, in which case I think euro would get an absolute severe knock on the head. But this one is, I'd say, if post Bank of Japan, post ECB, watch those two levels: 139, 60.80, and then this 143 10-ish. If that would go, then we could really see a quick move back to the triple top that we had, the famous city triple top at 144.30. That's sort of for the yen pairs. Let me quickly rush through the rest. Gold, we're still there. Moving on. It's still 1700 and then 1722 for a starter. Old records needs to go above 1722.23 to have a chance to get back up to 1750. If we go again below 1698, 1700, 1670, 1680 is really possible. But for the time being, it's very quiet on gold. Silver, this was one where I took a bit of profit, as I said, at 1895. Since then, we've broken above this trend line, but it's a sideways action. I really think we should, to get more optimistic, move above 1918 and especially above this 1940. I think if 1940 goes, we will have like a fair chance of getting back into the 20s. If not, 1870 on the downside, 18.5, this one here. Yeah, 18.5 is going to be interesting as well. And then moving on to, there's one I want to mention later on. Dollar MEX doing a bit of a yo-yo around the channel. But this channel now, this line is starting to really water down. It's been crossed nearly as many times as the Shibuya crossing in Tokyo. So starting to get really watered down. The real level is probably going to be somewhere around here, 65, 68. 2077, and then if it goes back up 2095, 21, the figure. We need to move back below 2044 to start with. We are not far away, but I would be much more constructive on MEX again if we can break below 2030 and 2020. Euro MEX, I'm still a bit short of that one. Trying to add into this zone, but yesterday I shied away a little bit about it because the news on the euro was a bit positive, and I didn't know where euro dollar would end. But now we are back below 21. It looks as if I will wait until after the ECB. But if ECB can't take it back above the 55 around 2108, and especially 2120s, then I might start to add again to my shorts euro MEX. And there's one. A quick look at the rand for those who are watching emerging markets. Still the bigger zone to me, 1737, 1747. We are turning around the 1706. The rand data are not specifically bad. Oh, we also have SARB today, actually. So the funniest central banker, the angriest central banker in the world is perhaps speaking today. So if he does a presser, watch it. He's extremely funny, the South African Reserve Bank governor. Yeah, if we can have a close below 1695, maybe a bit, maybe we have a chance to get back into the 1640s, but it will depend on what SARB is saying. We have still a lot of risk on Eskom and stuff in South Africa and weather conditions and things as well. But it's still a high yielder. So if they as the market expects. Why is it not on here? Oh, no, it's tomorrow. So it's tomorrow, sorry. If they, as the market expect, raise 50 BPs, we could have again some more differential interest rate differential creation going on. So the rand may kind of benefit from it, but we really have to watch those reactions after that. And then the other one I wanted to mention is NOK. So here we have the euro NOK rejected on that spike in June, rejected twice. Now we're gradually been coming off again. We have a bit of a zone here around 1010. We are trading slightly above. If we could break this euro NOK 1010 area, we might have a look again at a move down to 10 or even 992, in my opinion. But of course, we'll have to wait and see what the ECB comes up with. Dollar NOK, bit of a double pattern here. We are trying to break below this wedge. I'd say we've tested it again. It would be a decent break if we hold now below 995, 993, 95, let's say. But you have to give and 990 is the other one. So pay a bit of attention to what's happening on the energy front, because don't forget that whatever problems that Europe has with Russian gas and oil, Norway should be a beneficiary of this. So if there is more trouble brewing on the Nord Stream front, the Norwegian krone may actually continue to strengthen a bit. Get back above 995 in the dollar Norway, and here this one 997. That could mean that we are back trading this wedge. I'm about done for the time being for what I wanted to show, Ryan. If there's anything else.
Yeah, I can grab them back.
Okay.
Right, so grab that. and grab that. Cool. So just a question on here from Stephen. How do you keep in tune with all this news all over the world? For me, obviously, I trade full time, so I'm in front of the news streams from the moment I sit down to the moment I get up, and even beyond that, if my phone's pinging. And you don't need to become an expert on anything. You just got to know what is behind or what news is happening behind any particular moves at the time. So, you know, we know the Ukraine war is going on. We know central banks are raising rates. We know there's problems with the gas supply lines, and some themes run longer than others, like the war. Some things are more short term, like the Nord Stream maintenance window. But it's not difficult to keep up on the news on things like Twitter if you're plugged into the right people. And as Brand says, you know, that's the beauty of being in a community, because, you know, if I don't see something, someone else is bound to see it. You know, if I don't post something, Kay will post it, or one of the other users will post it. You know, there's always someone who sees something that might be important, and it's a collective thing. But I understand it is hard for those who don't trade full time, trade part time. You know, you've got other jobs. You need to keep your mind concentrated on other things. It's hard to dip in and out and know what the news themes are for the day. But I hope we help with that by doing the little rundowns that we do at the beginning of the show. It can just help you with the picture that's going on in markets and the world. And I do like to update. You know, it's okay, as I say, you know, putting all these headlines out and telling you about the data, but every so often I will dip into, you know, okay, we've had a load of data the last few weeks. What does that mean for the bigger picture? And we give a little review of what it actually means, and has anything changed in the fundamentals that could cause a shift in central banks and whatever. But it is a joint effort. You know, I miss plenty of stuff. You know, I'll probably watch thousands of headlines scrolling around, tweets and everything each day. It is hard in this day and age of information overload, if you like. We can get information from everywhere. That stuff, you do miss stuff, and you hope that someone else has picked it up if it's important enough that it affects your trading or could affect your trading. But that's it's a hard job compared to the old days when I was in the pits, where we just had one TV screen, or several TV screens, but all with one stream of news on it, and that's all we got. So if it wasn't on there, it wasn't anywhere as far as we were concerned. But that's why I'm sitting here with 8 screens, not all with news on, obviously, but you just got to keep your eyes peeled everywhere at the moment. So what I want to look at is dollar CAD as well. And Gavin brought this up, that we're heading towards support down in the 128.50 area. Now, pretty good technical price action going on here. We were watching this big 30.80 level up to last week. We got a break through it, you know, ran quite high. We saw this overshoot in a lot of dollar pairs. This is when obviously euro went below parity. You know, Aussie dollar went down, Kiwi went down. You know, big overshoots everywhere. And then we look to see, do these broken levels hold? And this is what I've been trying to say about euro dollar at 103.40. You know, the 103.80 or the 130.80 in dollar CAD is a bit like the euro's 103.40. You know, what is the price action going to do if it breaks it? Can it hold, or does it get back under? What's happened? It broke back through pretty much straight after, back to being resistance again. Then we look further down. What are the other areas? You know, we came all the way through this traffic here, this zone, 129, 40s, 60s. And now, you know, this is a big zone that I've been watching for probably a good year or so. We're back below the 129 level. And yet again, we've seen a move below, and immediately after the rejection, it found support, bounced, cracked through, straight after its resistance again. So here we've got a break like at the top, but in reverse. And now the zone has become a zone again. 129 has become resistance again. And this level here could be a bit of a line in the sand down towards, you know, 128.5, down to the low 128s, you know, that we saw in June, this level here, because it is, again, coming off a prior move higher that we got here latter June. Now, this break up here, through the 128. You know, significant break, found support into the area again, confirming the break, keeps the momentum going. So the question now is what do we do here? Do we come down and hold these levels? If we do, that keeps another attempt higher in play. What do we do when we get back? If we get back to 129, do we just move on through and have another look at the highs, or are we then going to find a bit of a battle going on between the big figures? You know, quite tight. CPI today could be a big mover, as I said, for the CAD. So it could be a make or break. If it is a hot number, super hot number, market is going to be thinking perhaps another 100 pips is coming from the Bank of Canada. We're going to see this level broken. The key from there is, does it break and then become resistance? Confirm the break. That'll give you a bit of conviction to maybe go with a short, or does it have a quick fake out and we're back above again? But the Luna is looking interesting. When it wants to play nicely, it can play very nicely with the techs, and for the best part, it's doing the job you would expect, or I would expect, against the funny colour lines I've got on my chart, which is all technical analysis is really. So yeah, keep an eye on the levels are standing out. They are being clear, and that's what we want as traders. Nice clear levels. Brian, you keep asking about expanding my screen. I'm on full screen, so I don't know how you're watching Zoom in, but you might need to full screen your Zoom window, and I think Mike said there's an option, perhaps a view option where you can expand it, but I'm on full screen as far as I can tell here, and apologies if that's not too clear for you, but I'll see if there's any other settings I can tinker with behind the scenes for the next show. Stel, I don't know if you got anything you want to give us an update. You still running your silver? Any change to the fundamentals or the picture there?
No, although we have to say that metals have been underperforming for weeks and weeks, and arguably they're still underperforming because with yesterday's rally in equities, they rallied but only a little bit. So it's still not utterly convincing. It's still not convincing, but I do have my longs in from 1880 because. Hey.
Unmute yourself or restream too, please.
Oh, sorry. Hold on. Yep. All right. So sorry about that. So I still I have my longs in silver from 1880. They have been underperforming metals with the rally yesterday. They didn't perform as well as they might have. But I from a long time ago, I had been looking at some levels, and I'm perfectly happy with the way I trade them to be long at the level that I got long at. Having said that, could they move lower if we get more aggressive rate hikes, which I think they will? We will get more aggressive rate hikes. Yes, they can move lower, but at some point we have to understand that these rate hikes are coming because of inflation. And inflation, what does that mean? The price of goods and services. Actually, no, the original definition of inflation is a change in money supply, but the way CPI is calculated is goods and services. And if you have inflation which is going higher and is leading central banks to be hiking, well, inflation means prices go higher. So theoretically, precious metals as well should be going quite a bit higher. But in the short term, the knee-jerk reaction is always to see a drop when yields are rising. I think that's overdone with silver. Yes, we could go lower, but I'm very, very happy to be long at the levels I am at, and with the way I trade them, with pretty much no leverage, and my time horizon is not a day, it's not a week, it's not even a month. I'm perfectly happy with that. But otherwise, it's all about tomorrow, the ECB and the Bank of England, and actually no, tomorrow is the ECB, right? Yeah. And the BOJ as well. Let's not forget that. So we wait to see what they give us, and I really do think that the chance of them giving us a 50 now is quite high. So
yeah, definitely. I just want to quickly point out, going back to CAD, just noticed it earlier. We seem to be off the oil bus now. I mean, it looks like in general commodity currencies have got a bit of a bid behind them, and that could be what's behind oil, what's behind the CAD as well. But you know, just looking at oil, you know, it's a bit off, and we're still seeing a CAD gain. So that doesn't usually happen. So perhaps we've got a bit of a disconnect from oil at the moment. We have seen that happen in the past few weeks, where it's really not been correlated closely with oil, complete disconnection. So it could be we've got a bit of a small disconnection there anyway. Right, so if you guys and girls have no other questions, we should call that a day. Just want to Arif put out a comment about blocking the noise, i.e. market news, and it's nonsense to throw us off course. I'm going to disagree with you there. I know a lot of people who are just purely technical driven, and they ignore the news, and you know, they discount it from their trading, purely level driven. And as much as I respect that, if that's the way you trade, all the power to you, but don't underestimate the news. The news is what can create your technical levels. If the ECB came out today and hiked rates 75 pips, you would see a euro shoot, and that will be your bottom for probably some months, and you'll go back and draw a fib off it, or a trend line off it, or something off of it, and you know, 6 months time you think, oh yeah, that's my technical level. Well, you've forgotten that that technical level came because of a big piece of news. That doesn't mean you have to watch every news headline like I do. You know, as I said earlier, I probably watch and hear thousands, listen to the squawks, and 99% of it goes in one ear, subconsciously gets processed and thrown out the other side. It's the bits and pieces that potentially do make a difference that I twig onto, and you know, as I say, some of the big headlines are what make your technical levels later on. So don't discount everything to do with news, even if you're purely technical. You said you meant some noise, it's striking a balance. Yeah, absolutely. But that's also not just for you, just for other people who tend to say they're purely technical based. Some people say it because they don't understand, you know, the headlines and the fundamentals. And I hope we give a bit of insight in that into how to look at fundamentals and factor that into what we see in markets. So good point there, F. Thank you very much. Just lastly, if any of you folks do want to join us on the Forex Analytics Traders platform, please check us out. You can find that on my site, forexflow.live/platform, and it's still there. And I might pull it at some point, so be quick or you'll miss out. You can get a 20% off your subscription for the life of your subscription if you use code FFL20. So please do come and check us out. And to you 8-cap folks, thank you for joining us as well. We're here all week. I wish you the best trading today, everyone. Stay safe, and we shall see you tomorrow. Thank you very much.
Thanks, everybody.
Have a good day.